Okay, welcome to the next chapter in unit number 15, trade strategies using TPO and volume profile. We're going to be talking now about poor, high, and low repairs. So by repairs, we mean when these levels are going to get revisited. So let's open up a chart and let's move down just to get the screen blank again. Or let's bring up a poor, high, and low just so we can use that as an example, which we have a very clear one on this extended hour session in the S&P 500 market, yes, and we have that right over there. So remember then that a poor, high, or low is when there is a lack of excess, and is going to be basically the opposite of excess. Remember, when we talk about excess, we're talking about this. When we have large tails with a single TPO, even like this ones with like just 2 to 3 TPOs are, enough of an excess, but they're just regular. But when we have a big one, this is, in this case, this is a bullish sign, as we have a lot of buying picking up and pushing this low very quickly. Okay, but then when we have poor highs or lows, this is going to indicate that in the case of a poor low, there's short-term or weak-handed shorts at the low of that day. And we know this because every time the price pushes down to the bottom, they get bought up quickly, and that's why we form this poor low, as in this case. Okay, there's 2 forward-looking indications for this. If prices should go back, should back away from, let's say, this poor low, as there are a number of shorts trapped at a poor location. The second is that if, let's say, on the next day or session, the poor low is going to be revisited, then the odds are that it's going to break and is going to move lower. In other words, if we push back again into this, there's a good chance this is just going to continue pushing lower, and this is what we would call this low getting repaired. If we come back and trade through this level here, the poor low, then that's what we would consider a level getting repaired. If these levels, they don't necessarily have to be retested on the next session or next few sessions. And if we don't have a retest, then this will be what we would call a carry forward. Okay, so usually, you can references levels like this, for example, which are not tested immediately, and you would just carry forward it into the future. As you can see, when this market started coming down, this went right up into this repair of this level, for example. Okay, so if they don't get tested, just like with the single prints, we're just going to have it as a reference for the future. Okay, so this example is the one that we just mentioned, how this poor low, we carried it forward, and then we had a repair here several days later. Another example in gold. Here we have poor high over here. Poor high or low also help us identify areas where there's a lot of crowded traders, because this is a poor high low is nothing more than an incomplete auction that's dominated by the shorter time frame traders. So in other words, more like retail traders. And this levels that we have over here would tend to act as short-term support and resistance. So in this case, you can see we're making a reversal for an uptrend, and market closed right at the high, so there was a lot of buying pressure here that was not getting through in this day. but then you can see the following trading day opened, market had a flush down, and then we came back and repaired it. And in this case, we had a breakthrough and then a very nice continuation off of that. Here's a zoomed in view of that same example, and you can see we had a pretty significant ledge right here in the TPO going into the next trading day open. The market opened, came down into this ledge, so we pretty much had an open test drive. We tested this significant level, and then immediately we bounced back up, and market went right back up into this poor high level to repair that. Next example here in the NASDAQ, we have this extended trading hours with this poor high right over here. A lot of time accumulated right near the top, so you can see there was just a lot of buying pressure. We did have a rejection and close back within this bottom area. Next regular session, we almost repaired it, but it failed. But then you can see how on the next trading day, we actually got a pretty balanced profile with a very wide opening range. But you can see the upper extreme of this session profile was a repair of these levels, and then market just ended up balancing for the day. Okay, so let's go into some charts and just see some more examples of this. Here we can see some in the Euro US dollar chart in Forex. And now when a poor higher low is getting too crowded, it also indicates that markets can be extremely overbought or oversold, and they can be due for a short covering or like a long liquidation. So you can see right over here, we had 2 days of market making, well, 3 days counting here, making new highs, and we're getting now 2 poor highs in a row over here, and then we have a pretty big move down to the downside before we come right back up into repairing this high right over here. Okay, so in such cases where we can have, overbought or oversold conditions, you should just focus more on the surrounding key reference levels and the market context as well, just to be prepared for these scenarios where there could be short covering or long liquidations. And again, you can see like right here, we have a P-shape profile. So those are all indicative from the day types of this type of environments. Okay, and the more crowded the poor highs or lows are, then the odds are that they're going to be revisited in the short term are going to be higher. Okay, so that's it for this unit right over here, this video. Let's go on to the next chapter.